Welcome to another episode of Money Says. Today I'm going to take a look at supermicrocomputers, one of the AI bellwethers. Supermicrocomputers has been particularly choppy as a stock over the last 52-week period. In this video, I'm going to take a look at exactly what supermicrocomputer does, and a look at the industry landscape, market share, and such things. A look at Supermicro's strengths, weaknesses, opportunities, and threats, their financial statement analysis, and a look at their technicals. And then I'll give it a Manny score at the end of it. So at the end of this video, you should hopefully have a good sense of what you should do with the stock. So I'll see you in the next section. So supermicrocomputers is essentially a total solution for server, storage, networking, things of that nature that you would put in a data center predominantly. What are the components of a data center? I'll go through in the next section, but that's what supermicrocomputers specializes in. Unlike Dell and HP that also sell desktops, notebooks, tablets, and handheld devices. Their customers are hyperscalers like AWS, Azure, GCP, and enterprises like banks that might want to have their own data center. And their focus or their value proposition has been touted as sustainable, high performance, and cutting edge technology. So that's what supermicrocomputers is all about. In terms of the business mix, they're fairly heavily concentrated in the US, as you can see from the blue section, followed by Asia, and then Europe, and other. And then recently we've seen or as released today, we've seen data centers or large data centers are occupying a big portion of their revenue, 64% up from 50%. And that included one big deal with a hyperscaler. These are the components of a data center. So in order to run a data center, so data centers essentially you can imagine a AWS procuring space at an offshore facility and having these massive data centers which then produce or provide compute power to many businesses. So if you're a business, then you're likely going to, and if you're a cloud-based business or you're a digital business, then you're going to your software business, you're going to AWS or GCP or Azure, and then you're paying them by month on usage, and they are essentially having to have that capacity for companies like yourselves. So the components are you need memory, which is server and processing power. You need storage devices. Then you need networking devices. You need cabling to stitch it all together or hook it up all together. You definitely need air cooling. So these components get very hot, and therefore you need a lot of air conditioning. Now that's where supermicrocomputers is an edge in liquid cooling. And in liquid cooling, you can essentially eliminate air cooling, which is what supermicrocomputers is trying to really say in all of their earnings releases. And then you need generators, so backup generators, and of course you may need a personnel or two, a security person over there or an operations team, depending how large or small it is. But that's essentially what a data center is. Supermicrocomputers financial statement analysis. So I've just pulled this up from the SMCI website for the last quarter, which got released today, earnings for. And they essentially, if I just go to their income statement, they've hit $5.3 billion, which grew at 1.5x versus the same time last year. Their margins are around the 11% mark, so 596 divided by 5.3 is around 11%. And if I look at TradingView for their for their gross margin trend, it's been steadily declining. So as the obvious explanation is as much as they've grown revenue, they've also diluted their margins. And the drop this quarter is pretty significant, 11%. So one of the question marks there for supermicrocomputers, although they did explain it. So I'll talk through that in the next section. Their OPEX is really low for the size of their company and for the type of their company. So if there is a section in there which explains operating expense percentage, it don't, but it's very low. In terms of their diluted share count, I find this is one of their strengths. 64 million is very low for a company of their size. And from a diluted earnings per share point of view, they've increased that from 3.4 to 5.4. So all in all, their income statement performance was good, albeit the erosion in margin. if I go to their balance sheet, so they got, from a quick ratio standpoint, 9 billion versus the 2.4, so current assets versus current liabilities, very, very solidly liquid. They don't have any issues there. They've got $1.7 billion in the bank. From a debt perspective, they've got $1.7 billion in convertible notes, so which makes up most of their debt, and there were other long-term liabilities. So let's just call it 1.7 even in debt. Now, when you compare that to their equity, that stands at their total equity is around Stockholders' equity is $5.4 billion. So there's nothing to worry about so much from a debt standpoint. That number 1.7 may be high for some people, but if you go to their income statement, which is down here, and you look at their interest expenses, it's a drop in the bucket. So I wouldn't be concerned about it. I think from an income statement standpoint and a balance sheet standpoint, they're very strong. Now, in terms of their technicals, so let's go into that real quick. So this is their technicals, and this is their chart. So Supermicro Computers, in overall context, we had these last week, the end of last week, which had a shocking PMI, Purchasing Manufacturing Index data, and then the labor data, which were both negative, and that really got the stock market reeling, and everyone was concerned, and they were talking about rates being cut earlier than later, and so on and so forth. And then there was a recovery today, and then there was a bit of a, and then aftermarket is when SMCI released earnings. So the SMCI performance was, the stock went up to approximately 724, and then dropped all the way to 524 or 534 right now, I believe it is. So there was some good rallying at the start, and the stock just cratered, and I think I know exactly why it did. But let's visit some of the SWOT analysis, and then finally let's look at some of the things that might help us make a decision of what we should do going into the future. So I'll see you in the next section. SWOT analysis, and for those that may not know what SWOT analysis, a look at your internal capability and a look at external opportunities and threats. So internals would be strengths and weaknesses. Everyone has strengths and weaknesses, and every company in the world has some opportunities and some threats. So the way I look at it is, what is the net effect of these strengths, weaknesses, opportunities, and threats? So the strengths definitely, and it's been proven, is that their engineering and manufacturing is US based. That what does that mean? That essentially means that they can do things quicker, and they have a greater handle on quality. So they're fast. They tout fast time to online. What that basically means is that they can, when they get their order, it's shipped out quickly to the customer. The customer can then, the customer may put their equipment in relatively quick fashion with Supermicro Computers' help, or Supermicro Computers may have go-to-market ready equipment, rack scale solutions ready to go and just fit in the data center and just start from day two. So they've made some pretty bold advancements in this particular area of fast time to online. They have a very high revenue growth, as we saw, so high top line growth. Liquid cooling, we spoke about that. So the fact that they might not need their data centers, or their equipped data centers may not need any air cooling. They have a low total cost of ownership because of that liquid cooling. So essentially, air cooling is eliminated. Their CapEx investments, for the most part, are pretty much done. They've had those two, I believe, total 3 facilities, Silicon Valley and Malaysia. So that's on the strength side. On the weakness side, the gross margins are decreasing. If I just look at 4Q versus the last many quarters, they started off from 18%, now they're at 11%. Their earnings call, I think, can be crisper. They need to really explain their plan to claw back these margins in the future. Their opportunity is, obviously, they need to improve their margin, and they've said liquid cooling won, and that hyperscaler deal impacted margin. So as liquid cooling improves, and they said half of that, the CFO said half of that was related to liquid cooling ramp. their margin will improve. They've got new products coming up. It's called DBS, and essentially it's going to make them even more sustainable, even more high performing, and even more cutting edge. The threats, definitely competition from Dell and HP. Dell's 19% market share. There's many ways that Dell can come and win deals back from Supermicro Computer. Liquid cooling is not a new advancement. It's been there for many years. There's delays in NVIDIA Blackwell chips. They may have continued pricing or margin pressure from hyperscalers. I mean, hyperscalers use them as a vendor, but they may have these big deals that have these huge revenue numbers, but they may be diluted with their margin. And they face a lot of investor scrutiny. I think they're a lot more prone to bad news than they are to good news. And any kind of bad news really hammers the stock. That's on the SWOT analysis bit. And so, knowing that we've come to the end of the video, I thought I'd give it a money score, or a money score. So from an industry leader standpoint, because they're not number one, I give them a number 2. I think they're second behind Dell, even though they're behind on market share on HP. I don't see HPE spoken about a lot in this whole artificial intelligence, and they're definitely not called one of the bellwethers. Their strengths and opportunities outweigh their weaknesses and threats. So I've given them a 4 there. I've given them a 4 on fundamental value, just because if I look at their ratios, even at that price of 616, and I think Supermicro Computers today or after hours is around 535, so bloodbath after hours. Their price, the PEG ratio, price earning growth ratio, is 0.41, which means that there's sufficient value in the stock in the future relative to their earnings growth in the future. And if that compare their forward PE of 18 versus Dell, or even in this case an IBM, that's at 17 and Dell is at 10. So Dell's also relatively cheap, but Dell's PEG is at 15. So their earnings are not growing relative to their price multiple that they're asking for, and neither is IBM. So no one really is, and Supermicro Computers is. So I think that's a positive, a strong positive on their side. From a technical strength standpoint, I mean, this is a strong sell indicator to me, although there may be an inverse head and shoulder appearing over here, which might make the stock go up in the future. And from a analyst estimate standpoint, they're definitely, if I look at SMCI and if I go into their analysis, I believe, and if I look at their price targets, they're currently here, their average is 1,000 in their highs, and I would agree with that. My target for them is somewhere around the 1,000 or 1,100 even. They're very low, so I feel like that gives them a 4 because they're undervalued by a lot. For an aggregate score of 19, which and each component is divided by 5, so equal weighted, around an 80%. So I give this a stock a thumbs up. The money score is a strong positive. I think it's a great idea to start to build a position into SMCI. I think they're relatively at the start of their innings in terms of making inroads into the world of AI. And data centers. They're aiming for I believe 2xing their FY24 number, so going from $14 billion to $28 billion, something roughly around that mark. So they're in their early innings. The stock split's coming. The stock's only going to go up in the future, so I give it a heavy thumbs up. I'll see you in more sections or more videos around this sort of content. Like I said always, guys, if you like this content, please give it a thumbs up and subscribe to the channel so that you get more and more content around these things. I'll see you guys around, and have a good trading week. See y'all.